Guys, welcome back to the channel. I've got myself an iced sparkling water here, and we are ready to dive back into another video where today I will be showing you one of my bread and butter trading strategies on the 1 minute time frame for the entry to easily get funded. The brilliant thing about the 1 minute time frame is the risk to reward ratios that it allows you to get in such a short space of time with relatively small movements. So first we'll get into this. Now, number one is going to be defining your range. You want to be trading from a range that previously took liquidity. So here we're looking at price action on GBP USD. As you can see, we have a run on sell side liquidity here and a rather large displacement to the upside, giving us a swing high and a swing low. So we can define our range from high to low, and we can also denote our no trade area. Why is this our no trade area? Because we do not diddle in the middle. You should never diddle in the middle. Why? Because if we just extend this over, you will see what I mean. This is the type of price action you get when you start diddling in the middle. You get, shifted internal structures, then the low fails, and you get all of this sort of mess of a price action. So for me, I just don't do it. I always wait for a point of interest that is contained within the lower 30% or the higher 30% to be hit before taking my trade. And as you can see here, we do have this lovely unmitigated order block located in the lower 30%. Usually I find myself, I have one or two levels. The reason I wouldn't choose this is because if you see here, we have, if I just get my pen, where's my pen? Here we have this rather large displacement to the upside and then a pullback, and we don't run liquidity to the left here. We just sort of, and plus we miss the mitigation of this order block here. We just sort of react off this fair value gap and then obviously displace back up to the upside. So for me, this would be my sell side liquidity inducement just above my point of interest, just above my order block for me to pair with my entry. Now, what have we done? We've defined our range. We've defined a point of liquidity to take into our order block. Now we need to denote our session open when we want to be trading. And in this instance, it's going to be London Kill Zone, which is going to be Frankfurt open until 5 a.m. New York local time. So that's 2 a.m. to 5 a.m. New York local time. And we also need liquidity to target, either to get our risk off or just to be a magnet for price. And as you can see here, we have a set of rather clean highs, which were formed just before the start of the European session. So let's play price on. As you can see, we start to displace towards our point of interest, which is inducing traders to start selling early into the market, just giving us more liquidity, and we tap in. And as soon as we tap in, we can drop to our 1 minute time frame. And if we just bring price back here, and like I said, I always wait for a point of interest to be hit within the lower 30%, just because then I can be a lot more aggressive with my entries if I get a favorable reaction out of it. So we don't necessarily need to wait for a shift in structure on the lower time frames to take an entry. We can wait for something like a fair value gap to be taken out and then respected and turned into an inversion. So as you can see here, we have this current fair value gap, which we trade into, we give a little reaction, and eventually we break and close through, giving us an inversion fair value gap. So what we can also do is notice that inside this inversion, we have another normal fair value gap, which I'll just denote in a different color so we can see this. So what we can do is we can simply take our entry on this inversion here and just give it a nice bit of breathing room, which would be, the candle that creates the actual non-inverted, the standard fair value gap. And we can target buy side liquidity, which is either going to be 1 minute time frame equal highs, or we can do our original target, which was up here. So let's wait for price to tap in. As you can see there, we tap in and we close, and the bodies of the candles are respecting the inversion as well as the regular fair value gap, as you can see there. So this is giving us a good idea that our trade idea is going to potentially play out. And then here, what do? We create a bullish order block on the 1 minute time frame, so we can potentially look to scale into the move. And we also create a fair value gap on the 1 minute time frame as well. So we can take another entry on this M1 order block here, just giving it again a little bit of breathing room. I would personally cover the order block here, and we can target either for the scaling, you can take your risk off a little bit earlier, which would give you still a nice 5R, and then you can hold the other one to your initial target for an 8R. So let's see what happens. And here we tap in. Again, notice that the bodies of the candles are respecting this fair value gap, as well as they're respecting the open of the 1 minute bearish order block, bullish order blocks. This is giving us decent, prognostication that our trade idea is going to play out to take profit. And as you can see there, it does so with very little resistance, giving us 5R plus 8R, which is going to be 13R. Or if you were a little bit fruity and you held them both, you then got 8R and 8R for about 16.5R there. So very, very simple strategy. It does require patience and waiting for price to come into your decent levels. If I just go back out onto the 15-minute time frame, you'll see here that you need to avoid trading in all of this chop. And anyway, this is not during session anyway, not during kill zone. This is like a New York afternoon session, and then we have Asia in here, and then London session. We get a lovely impulse, which actually nets about 50 pips. But we only need to take a small chunk of change out of the market, so targeting just these highs would be more than enough, especially when you're running those tight stop losses. So I hope you enjoyed the video. Make sure you check out my Discord. The link is in the description. It's absolutely free. Me and my buddy, we're in there. We're sharing all of our trades that we take every single day, and we share our market updates every single day, the points of interest that we're looking at, and also we break down our trades for you guys. If you want a little bit of homework, you can go and study all of the charts that we are sharing. So I hope to see you in there. Like I said, links in the description, and I'll catch you in the next video.